Yeah, and Steve Nolan is alongside Colleen because we're going to start our roundup of the week, Steve, looking at all of this as well. Morning to you.
Morning, Will.
Where do you stand as a sort of a more of a step back observer to all of this, the discussions about AI bubbles? Because it feels like, doesn't it, people who were there through the 2008 crisis and other bubbles in the past are the people who are speaking now pretty vocally about this.
Yeah, I mean, you are hearing more and more kind of people standing up saying this potentially feels a bubble. And like some of the valuations we're hearing, it does feel like we're getting further and further away from what could be kind of a realistic stream of value on that. I think one of the interesting ones was John Thornhill in the FT talking about a kind of a double bubble. You know, Jeff Bezos was saying this is a good bubble because it's going to create lots of kind of good infrastructure. And even if the firms that create it go away, we'll have something left. And that's correct. But there could be a lot of financial damage along the way. But if I could say for certain, I probably wouldn't be here at 5 in the morning.
Exactly. I don't think any of us would be if we had really those oracle powers. Well, let's hear just come in on that point though about the volume of the spending against the potential return, because even sort of being mapped out in the future, the companies kind of look like they're going to be for a long time spending a lot more than they think they're going to make for their shareholders on this.
Yeah, definitely. I think there are kind of real questions about, to a certain extent, the business case of the AI in general. Is are people in the long term going to pay for it? You know, you listen to Jensen Huang. He has a kind of a position of if we build it, that they will come. You know, it's like people, we haven't even begun to see what we can do yet, and like the change is going to be so transformational that people, businesses, will be happy to kind of fund this kind of thing. But that is an open question. Yes, there's obviously kind of massive use cases for this technology, and there are going to be increases in productivity. I use it myself. My productivity has increased in some places. In some places, it feels like it's slowed down as I argue with a computer at 10 o'clock at night.
Or go down loads of rabbit holes asking it more and more questions.
But there's definitely kind of questions about that. And I think in terms of kind of the funding that Joe was talking about, I think one of the major concerns is sometimes the kind of circular investment that's going on, that like Nvidia is lending to OpenAI, and OpenAI is promising to spend that money on Nvidia, which, does good things for the stock price. But is there any kind of like real intrinsic value being created in this kind of behavior?
Colleen, on that, Steve, if that was the good news, I suppose, for the Chancellor, the worst news came the kind of week before, didn't it, around particularly what's going on with unemployment and hiring, starting to kind of look like the economy's under a bit of pressure.
Yeah, obviously we kind of have to put an asterisk beside some of the figures from the labour force survey at the moment, but it does feel like there's a certain amount of cooling in the economy on various kind of indicators. Just this morning we saw consumer confidence has kind of taken another hit in one of the surveys. So there's kind of, a lot for the Chancellor to be worried about. And I think looking at the inflation figures in particular, one area to look at is the kind of level of service inflation. Obviously, we're kind of service-heavy country, and that's remained higher than it was prior to the kind of cost of living crisis, and that's kind of contributing to the overall inflation effect. And to be honest, this is something at this point you could say to some small amount or large amount could be laid at the Chancellor's door. The kind of decision about 12 months ago to kind of raise employer national insurance contributions, I think we're seeing that's having an impact on kind of costs of service, be that labour costs or pushing up prices. So in the decisions that
you think we really are, because that's interesting, Steve, because lots of our guests who've been in kind of Joe's role as our sort of business leaders on the programme have kind of said it's had an impact, but we've held off on prices, or we're trying to hold off on prices. Do you think that sort of dam's finally broken a bit, and we are seeing people put prices
I feel that we are kind of definitely seeing some of that washing through over about kind of the 12 months. It feels like, when these kind of decisions get made at this point. If you just look at the kind of the level of service inflation, I feel like at this point that is something that can be laid at the Chancellor's door. It was an unwise tax decision, which was forced on her by the decisions that the government made in the election not to raise any of the kind of major tax bands. And so, that's a decision that apparently, based on the news from the FT last week, they're going to stick to. They briefed that essentially briefed that they were going to raise income taxes, and now they're not going to. So we're going to have what we get on Wednesday. I think we're going to get another budget where it almost a sense that the Chancellor is kind of scrabbling around the back of the sofa looking for various kind of small sectors to raise enough tax to kind of deal with this persistent problem she's had of not having enough headroom.
Steve, thanks so much for your time this morning. I know you're going to be leaving us now, so thanks so much for your help as always on a Friday. Dr. Steve Nolan, lecturer in economics at Liverpool John Moores University. There's going to be plenty more from Joe and Colleen in the second half of the programme here on